How much of your holdings does the Mag 7 make up?
Well, for us, the growth benchmark, it's about 45% of the U.S. Russell 3000 growth benchmark. For our portfolio, we're about 30%. So we're actually, while we do own significant holdings in the Magnificent Seven, we are pretty significantly underweight those names. Well, I think part of what we're finding is when you get a market that increasingly becomes concentrated, like we're seeing in the U.S., and the Magnificent Seven has been a big part of returns, that it actually creates a lot of opportunities to look beyond that, right?
Yeah.
So our strategy is an all-cap strategy. We're looking at a lot of mid and large-cap companies, high-quality growth businesses that maybe are due for a bit of a catch-up in the market.
Okay. Bear with me with this analogy. Yul Brynner, Horst... no, bear with me. Yul Brynner, Horst Buchholz, and Steve McQueen. Yeah. There were only three left in the original Magnificent Seven, not with something Akira Kurosawa.
I like your thinking. Where are you going with this?
Right, I'll tell you where I'm going with this. Differentiation is being created within that particular cohort. So what stands out and who's going to fall by the wayside here?
Well, I think you've actually already started to see some of that differentiation take place year to date, right? It's the companies that are actually delivering, high quality earnings growth, free cash flow, and have a true sort of generative AI playbook or plan, have separated themselves from, I would say, the bottom part of the Magnificent Seven. And some have talked about the Wonderful Four, right, and the narrowing. Within our strategy, we're overweight NVIDIA, we're overweight Amazon, we're overweight Meta, we're actually underweight Tesla and some of the other names in there as well. Just part of that is recognizing you have to be an active manager within the Magnificent Seven. You can't just own them all.
So active manager, 2H, right? Assuming that the Fed, the dot plots play out the way they think things will, 3 cuts this year, although folks are starting to talk about 2 or maybe even none, right? That's going to happen 2H, back half of the year. That should technically or theoretically be good for Mag 7, right? Discounted cash flow.
It should be good for Mag 7, but it also, lower rates should be good for the broader market. One of the reasons the Magnificent Seven has done so well is that they do generate a lot of cash flow, right? And so as rates come down, you're going to see longer duration growth businesses pick up, a little more of a risk-on trade, and I think a broadening out.
Apple is a big holding at 2.7%. But when you consider the price action recently, and let's throw in Tesla as well, is that telling you that the story is starting to really hit home in terms of the China slowdown and the impact on the US MNCs that have exposure there?
Yeah, so I think it's sort of within the context of the strategy. Apple is a big holding, but it's over almost 10% of our benchmark. So it's one of our biggest underweights. We still like Apple. Apple's a fantastic business, great company. They have struggled to sort of define their AI strategy. And I think they also have exhibited sort of a little bit of a stale product lineup. And you've seen revenue growth, top line growth has moderated a lot. We think there's just better opportunities out there in the market other than Apple right now.